You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, shake it. Raise your hands up, raise them out.
Hi everyone, and welcome to today's currency call presented by Forex Trading Asia. It's just clicked over 11 a.m. here in Perth and Singapore, and welcome to all the members catching the call live as well. And anyone watching this on the delayed telecast with the YouTube upload, make sure that you do get subscribed and become a member of the LCMS Traders Club visiting the Jindal Thai website. And for today's episode, it is Wednesday, and we will be discussing the pound and also the euro pound with Jin. I'll be going through the DXY and also some movements in equities. More specifically, a couple of trades taken this morning on the Australian Stock Exchange as well. And there's quite a bit going on as well currently and also later today. And just to break it all down, we do have Kim Hong here, currency strategist with LCMS Traders, previewing the testimony from Jerome Powell later in the evening tonight, GMT plus 8 time in the evening, that is. But before we get into the trade ideas on the pound, and we also go into some commentary about the testimony from Jerome Powell, we will just go through the risk disclaimer as well. I'll share it and I will also read it out as well. It is definitely important to understand that we do discuss trade ideas, and I'll just share this now. And just before we do get into some details, I just want to read this out too, and I'll go full screen. So any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. And we are here to help with the members who are curious about any potential movements in the markets and whether they are looking like valid setups. So please feel free to ask and share in the group chat as well for the trading club members. So we've got Kim Hong here just to go through a preview of Jerome Powell's testimony. So over to you now, Gimmy.
All right, thank you, Scott. Okay, so Jerome Powell will be testifying tonight at 2300 GMT plus 8. Okay, it's actually a 2-day testimony. All right, so today he will be testing in front of the House of Representatives, and then tomorrow he will be testing in front of the Senate. Okay, I wouldn't say, okay, basically both days are pretty much the same, okay, in a sense that he'll be reading out the same script, okay, to start off the testimony, okay, and then after that it will be followed by tons of questions, you know, being asked by the committee members of the House and the Senate, okay, on day 1 and day 2 respectively, okay. So this time around, personally, I feel that, you know, this testimony may actually put Jerome Powell in a spot, okay. So basically what we want to pay attention to, okay, is, you know, with this ongoing Russia-Ukraine war, okay, will the US Federal Reserve still consider a rate hike? Okay, specifically, will it be 0.25% or 0.5%? Okay, so prior to this whole war, it is pretty much, I would say, considered that the Federal Reserve, okay, will actually be carrying out at least a 0.25% of interest rate hike in March, during March meeting, okay. But then because it gets more and more, inflation gets more and more hot. The committee members of the Federal Reserve gets more and more hawkish, all right, with many of them actually claiming that, more rate hikes should be carried out this year, and a 0.5% hike may actually be carried out, okay, during the March meeting. So because of that, the market actually starts to factor in, to price in that a 0.5% hike during the March meeting is actually likely. Now, all this is actually before the invasion of Ukraine took place, okay? Now that, this whole geopolitical tension has turned into a war and escalating further. At the moment, we are not even sure if there's going to be any de-escalation, okay? Given that the whole, the talk has already begun between both parties, okay? And the first day has already ended, I think, on Monday, okay? And then the next meeting will probably be today or tomorrow, somewhere close to today, actually, all right? So because of all these uncertainties and things like that, the market is actually starting to feel a bit not so confident, okay, in terms of a 0.5% rate hike in March, during the March meeting, okay, by the Federal Reserve. So Jerome Powell will have a lot to talk about. I wouldn't say a lot, but something serious to talk about later today during his testimony. Okay, the committee members of the House of Representatives will definitely be grilling Powell in terms of this. Okay, so inflation is still climbing higher than before. Okay, right now it's probably like 1 or 2 months away from the 41-year high level. Okay, and with this ongoing war, and will it be how will the Federal Reserve be approaching this whole inflation issue? Okay, will they still remain firm in the whole hawkish hikes this year? Okay, that's what the public wants to know, the market wants to know, and that's definitely something that the committee members of the House of Representatives will be asking Jerome Powell. Okay, so basically, how will the ongoing war impact the Fed's decision? Now, if let's say Jerome Powell were to highlight that he sees no manner that this whole ongoing war will actually influence the Federal Reserve in terms of rate hikes, then that will definitely be positive for the US dollar. Okay, that will probably mean that next day shortly after the testimony, we may actually start seeing headlines like futures markets, or the bond markets starting to price in a 0.5% hike again, okay, after Jerome Powell claims that the war is unlikely going to have any impact on the Fed's decision. Okay, now, however, if let's say Jerome Powell is unlikely going to make it obvious, okay, as usual, but if his tone sounds rather dovish, just like how the RBA, okay, statement states that indicates that the whole ongoing war is actually it actually poses a high level of uncertainty. Okay, if Jerome Powell were to mention something along the line of these, like what Governor Low has mentioned in the statement yesterday, okay, or a different variation of it, all right, then that may actually be not so good for the US dollar, okay? And even if the Federal Reserve were to carry out a 0.25% rate hike, probably like 2 weeks down the road during the March meeting, okay, it may not even be a hawkish one, okay? Of course, from now until, the next Fed meeting is going to be like 2 weeks, and, with the ongoing talks between Russia and Ukraine, anything can happen, all right? So they may very well withdraw, Russia may very well withdraw his troops, the war may cease and things like that, and things may actually go back to normal again, okay, hopefully. But as of right now, okay, based on the current progress, the current development, okay, Jerome Powell will definitely be put in the spot to, he has to choose his words very carefully, okay, and his tone will definitely be something that the market will pay attention to, okay, in terms of rate hikes and things like that. So personally, I feel that tonight at 2300 GMT plus 8 until probably like 1 or 2 hours down the road when the testimony is ending, okay, there may really be volatility in the US dollar. Okay, if let's say there's no major developments in the war, okay, today, all right, then the market will definitely be paying attention to the testimony for any price directions and things like that. Okay, and also pay attention that there's a Bank of Canada monetary policy announcement tonight at the same time, 2300 GMT plus 8 as well. Okay, so I would say tons of trading opportunities tonight during the US session, I would say. Okay, so just pay attention, if let's say there's not much of an opportunity going on during the European market session later on at 1600 GMT plus 8, then try not to force any trades and things like that. All right, just wait for the US session and see how things turns out. Okay, so any questions on the testimony? I will be, I'll be paying attention to the testimony, and I'll give you guys a breakdown of, any major things that, Jerome Powell has highlighted. And of course, most importantly, his view on, whether the ongoing war will actually have an impact on the Fed's decision. Okay. All right. So if there's no questions for now, okay, I'll hand it over to Scott for his analysis on the DXY. Over to you, Scotty.
All right, thanks, Gimme. And again, DXY is still sort of suggesting we're in a bit of a risk-off move. We're really currently pushing to 96.90 or so. Look, it is interesting what we are seeing. So we've got 96.94 or so is support. We're pushing over 97.40, sorry. Now, recent highs have been around 97.70 or so, and we still have a lot of unknowns. We do have Joe Biden making his speech as well. We have shared those links in the trading chat group as well for the LCMS Trading Club members. And, frankly, what we have been seeing is, pullbacks are being bought into. And just with the current uncertainty, it seems like that's probably the way to go until we get a clear decision on the negotiations that are taking place, which is still unclear. And there seems to be a little more aggression with the amount of arms being deployed into Ukraine as well, just with the missile strikes. So very much sort of an ebb and flow into the situation on what is going on, if there is going to be a little bit of a back down, still just a very dynamic situation. So I'm, long biased on the DXY. Now, just to have a little snapshot as well, I'm going to share the bond yield as well. So I just want to make sure that that is sharing okay, and it is. Okay, so that's good. So this is it's sort of the last few days now. So we are currently on the 2nd of March. This is going back to the 23rd of Feb now. So we were hovering on this is the 2-year bond yield. We were hovering around 1.6 or just above as the high. We have seen it really ease back down. Now, that is because there's just some commentary out of the institutions such as Goldman Sachs and the institutions that are really projecting that the interest rate rises will definitely occur, but just less aggressively. So there was chatter with this upcoming FOMC meeting and the rate decision that was going to be 50 basis points. And, it's sort of a coin toss on whether or not that will occur, but going forward, they'll be just less aggressive. So they'll still be increasing rates regularly, but more subtly and just sort of feeling out the situation, because it does look like that they have this fallback where that fuel prices is definitely looking to increase. We've got oil racing, today we've got it, Brent crude is above 110 a barrel. And it's just going to force this transitory narrative to maybe creep back in because of it's an artificial situation, because this is unforeseen, and what they is likely suggesting is that it will come back down once things have de-escalated. So, but currently it's not looking likely that that's going to happen immediately. So this FOMC meeting this month, we could see that 0.25 basis point increase, or the 25 basis point increase, instead of what's been anticipated as 50. Just as the Fed has proven themselves to be pretty conservative. And this is a major event that's going on as well. So something to look out for as well. And we have seen just an ever so slight decrease in that bond yield. So we have sort of seen the lack of buying into the dip there. So that's what I'm keeping my eye out on the 10-year bond yield. And also the US dollar is still seeing some buyers interested. So I want to wait and see. Ideally, we just creep back down to lower to 97 for potentially a buying opportunity. I mean, ideally that break below maybe the 96.70, but it's very flat. And with Joe Biden speaking right now, really, I'll be waiting for later in the afternoon for the London session to commence and then see if we can get it trickling a little bit lower for a buying opportunity, either closer to 97 flat or if it does break. But I don't see it really breaking substantially down, to be honest, unless there's a big event that does happen where we could see gold get some inflows and maybe briefly we see the US dollar have a little bit of a pullback, and that could be an opportunity. But I always like to wait for things to settle a little bit as well. Now, I did mention that I was just going to discuss the Aussie stock market as well. So we have seen a big move. This is Woodside Petroleum, a significant oil stock on the Australian Stock Exchange as well. So we saw it gap up with what we saw with the oil markets overnight as well. And I did get an entry in at, it pulled back on the 1 hour to 29.20 or so. And I did get in at the lower day or just above at 29.26. And there was a little bit of jostling at 29.40 that I'll just show on the 15-minute. And unfortunately, I did get out just above 29.40, and then it has taken off. So some opportunities maybe for tomorrow as well. Also, FMG, we're seeing the iron ore price break out as well. And that was a trade. It was breaking above 1850 and I got out. But again, I gave it a little bit of time, but it pulled back and I got out at 64. So a little bit happening on the markets, more for the commodity side with the strength we've been seeing as well. And I just want to quickly show you the price of Brent crude, which is more the international oil price. And as you can see, that's what it's been doing. Daily time frame. So we're really seeing quite the inflow now. And Goldman Sachs mentioned maybe $125 a barrel is what we could be seeing this year, just with the uncertainties that are growing. So something to pay attention to, the 2-year bond yield as well. But all in all, a lot of uncertainty. And I'd say the risk off is probably the best way to play it, unless you're more of a scalper, but that's not what I do. So please be cautious as well if you are playing the really low time frames. But those are my thoughts there. Pullbacks to 97 flat would be what I'd really be looking for on buying opportunities on the US dollar. And that is it for me. Now we've got Jin going through the pound against US dollar and also the euro pound. So over to you now, Jin.
Thanks for that, Scotty. So, we had a really good session last night with the Traders Club members identifying a couple of trade ideas that had played out overnight as well. So adding on to that, a lot of opportunities on the pound, dollar, and across the board with the way the dollar has been moving or is likely to be continued to move as well. Looking at the pound dollar here, well, before I look at the pound dollar, looking at the news, the guys have gone through all of that with you already, but you can see here that focusing on the pound dollar, there's not a lot of pound news to be released for the next, well, today and the next couple of days. The main focus is back to the US dollar. Couple of Fed Chair Powell testifying there, a couple of other news, and the non-farm payrolls on Friday as well. So economic data still going to be released through the week or the next couple of days. And we do have this Russian-Ukraine conflict happening at the borders at this point. So all that putting together, I think that we might see the dollar continue, consolidating now, but continue its strength towards the upside. What that means is looking at the pound dollar here, we were just talking about this last night where it broke that 1.34 level and it's broken that point right now. immediate trade idea will be to look for it to break below this 133 level, very close to it. It's bounced off this 133 here, up where the crosshair. I'll put a line there actually. So at about 133, we've seen it bounce once and twice here. So I'll zoom in a bit more. Right now, we're looking for it to track lower again. It looks like in the next couple of hours or the next candle, it might track lower. If it does break below this 133, then you can be looking for that selling opportunity. This is a quick trade, right? So about 20, 30 pip stop loss for, even if you have a 40 pip stop loss, for a good 70, 80 pip take profit, you're looking at a 1:2 risk reward ratio towards the downside, towards that 1.32 support level. Sure, it might hit this support level and bounce back up, but I think that if it does bounce back up, stay out of it for now. Wait till it reacts to this 1.34 before selling back down. But I think the higher likelihood will be for it to break below 1.33 for further downside. So given that we expect the pound dollar to track lower, what this means is for the euro pound, we just shared this last night, saying that if it broke below 8340, we can see further downside. That was that one trade that we saw about a 20-something pip move towards the downside. So right now, if the pound dollar drops, this could mean that the euro pound should be moving towards that resistance level of 84, right? That drop towards the pound dollar should push the euro pound up towards 84. It is resisted now by 83.50. Resisting at this point could be quite crucial. Main thing is, I'll come back to the euro dollar we spoke about yesterday. It has dropped based on our analysis yesterday, breaking below that 1.1173 level. It has dropped towards that 1.10. I think that similar to the pound dollar, we might see further downside on the euro dollar. If it does break below 1.10, we could see 1.09. So if that does track down, what this all means, putting it all together for the pound dollar, for the euro pound, is that I think we could see it bounce back up before tracking lower again. So I would be looking for that move back up. Oops, that move there. I'll move this away. Oh, no. I'll make this a bit shorter. All right, I think that we might see it bounce back up before tracking back lower again. So again, I would be looking for that selling opportunity, probably not immediately, but later into the day or later into the week, next couple of days. Again, a tight stop loss of about 20 pips, a take profit of about 30, almost 40 pips. You're looking at almost 1:2 risk reward ratio towards the downside for the euro pound. So not a lot of good news here for the pound dollar or the euro pound, with the dollar being the reserve, looking for pairs to move, looking for funds to move towards the dollar as a reserve or as a safe haven. We are seeing that strength towards the dollar, so that's likely to push the pound dollar lower, likely to push the euro dollar lower, which in the overall scheme of things might see that retrace and then a further move back down towards that 83.83 level for the euro pound. So looks like it's all about selling opportunities here for the pound dollar, the euro pound that we had yesterday, the euro dollar that we had yesterday already, and then now for the euro pound as well. I think a lot more trading opportunities for the yen pairs as well, as we see that move towards reserve. But we'll talk about that tomorrow. With that, I'll pass it back to you, Scotty.
Thanks, Jen. And that's right, guys. I think definitely an episode worth catching tomorrow, and also mentioning gold too, which has made a break out. So definitely a lot going on. And with tonight, please just show caution as well. And we are here to help for the LCMS Trading Club members. And thanks so much for everyone watching. Hope you have a nice rest of your day as well. Bye for now.